Trump officially declared the Iran war over in a letter to Congress. He said there has been no exchange of fire since April 7th. He said hostilities are terminated. Oil is at $108 per barrel. Bitcoin is at $78,000, not at the $90,000 or $100,000 that a genuine war is over statement would produce. XRP is at $1.39, not at $1.60, $1.80, or $2. The market has heard this before. April 9th, ceasefire announced. XRP jumped 5% to $1.38. Israel struck Lebanon. Iran shut Hormuz again. XRP pulled back to $1.33 within 24 hours. The ceasefire that collapsed in under a day erased $425 million in crypto short liquidations and then added them back within 72 hours. So here is the only question that matters right now. What is the specific signal, not the statement, not the letter, not the press conference, that tells you the Iran macro suppressor has actually been removed? Because when that signal arrives, every catalyst that has been building in the background since January activates simultaneously. And that signal is not a presidential declaration. Here's why the market's skepticism about Trump's war termination letter is the correct read and what the real confirmation looks like. Every ceasefire announcement in 2026 has produced the same pattern: pump on announcement, dump on breakdown, new low on re-escalation. March 31st peace talk hints, oil dropped 5% in hours. Crypto added $40 billion to market cap. By April 2nd, breakdown, oil back above $100. April 9th ceasefire, Bitcoin to $72,700. XRP to $1.38. By April 10th, Hormuz closed again, 400 tankers still stuck. The issue is not Trump's statement. The issue is that the Strait of Hormuz has handled approximately 20% of the world's daily oil supply. And until commercial tankers are actually moving through that strait at volume, the inflation pressure that blocks the Fed from cutting rates does not go away. And without the Fed having room to cut, or even signal that it might, institutional capital has a risk-free rate of 4.5% in treasuries, with no reason to move into XRP. The single verifiable signal to watch: ship insurance premiums for Hormuz transits. Below 2% means the strait is genuinely safe. Commercial tankers are moving in volume. Oil falls below $90. Fed gets room to signal rate relief. Institutional money rotates back into risk. That sequence, not the letter, is the confirmation. So here is what I want you to hold on to. XRP just posted its first green monthly close in 6 months. That's documented. The 6-month losing streak is officially broken. The RSI hit 30 in early March for the 4th time in XRP's history. In all 3 previous instances, that level was followed by 200% to 400% gains over 12 to 16 months. ETF inflows were positive for the 4th consecutive week. 25 million net positive last week alone. Year-to-date ETF inflows have turned positive, 148 million. These are real signals. But here's what most analysis won't connect directly. What happens when the Iran macro suppressor clears at the exact same time the Clarity Act markup hits the Senate calendar? Goldman Sachs has modeled this specifically, and the number they produced is not what retail is currently pricing. That's where we're going. This is XRP News Flow Signals. We track the geopolitical data, the on-chain signals, the legislative calendar, and the institutional flow mechanics. And we map them precisely to XRP's price structure. Data, not hope. Let's get into it. Let's build the oil to XRP transmission precisely. Because understanding this chain is the most actionable analytical framework available right now. When Brent crude is above $100, inflation stays elevated. Fed raised its 2026 forecast from 2.4% to 2.7%. Rate cuts are priced out. The 10-year Treasury yields 4.5% risk-free. Institutional desks hold treasuries instead of risk assets. XRP ETF inflows slow. Q1 saw net outflows of approximately $200 million. Every bullish catalyst, commodity classification, Ripple partnerships, RLUSD milestone, wars confirmation, gets buried under that pressure. When Brent crude drops below $90 and stays there, inflation expectations fall. Fed's 2026 forecast reverts toward 2.4%. Rate cut probability returns to the calendar. Institutional capital rotation out of treasuries begins. XRP ETF inflows reverse, and they reverse fast. The April 9th ceasefire, even though it lasted less than 24 hours, produced a 5% move on XRP and a 4% expansion of the total crypto market cap in under 24 hours. Goldman Sachs has explicitly modeled the scenario. If the war ends and the Hormuz Strait reopens, oil falls toward $71 per barrel by late 2026. At $71 oil, every constraint on institutional risk appetite that has been active since February 28th dissolves. The relief rally scenario. First move $1.60 to $1.85 resistance zone breaks. Second move with Clarity Act in the same window, $2 to $4 by late 2026. If Clarity Act passes and ETF inflows reach Standard Chartered's modeled range, $5 to $8. From $1.39 today, $2 is a 44% move. $4 is a 188% move. $8 is a 476% move. None of those require a new product launch. None require a new partnership announcement. They require the removal of the one macro variable that has suppressed every bullish signal in 2026. The war termination letter is a preliminary signal. The Hormuz tanker traffic data is the confirmation. But that's not even the most structurally significant development this week. XRP just broke a 6-month losing streak. And the data behind that break tells you something specific about where the cycle is. That's next. XRP posted its first green monthly close in 6 consecutive months. The 6-month red streak from October 2025 through April 2026 was the first in XRP's documented history. Not the longest losing streak in percentage terms, but the first time the asset has closed 6 consecutive months in red. Here is what the technical and on-chain data says about where that puts us. FX Empire's April 30th analysis identified that the RSI touched the 30 level in early March, for the 4th time in XRP's price history. In all 3 previous instances, 2015, 2018, 2020, the 30 RSI level was a cycle bottom signal, followed by 200% to 400% gains over 12 to 16 months. The current pattern, descending price channel on the weekly time frame. Key resistance, $1.60, then $1.80, then $2. A sustained break above $1.60 would be the first confirmation signal that the cycle has definitively turned. XRP ETF flows for context. Week of April 28th, $25 million net positive. Year to date, $148 million in accumulated net positive inflows. 4th consecutive positive week. This matters because Q1 2026 saw consistent outflows as macro pressure from the Iran war dominated. The return to consistent positive inflows, even at modest levels, signals that institutional demand has not evaporated despite 6 months of declining price. And here is the one number that puts the current level in exact context. $12.14 million in XRP ETF volume on a day when XRP moved only a few cents in either direction. That is not retail FOMO buying. That is institutional accumulation, consistent, quiet, and daily, happening at prices that reflect maximum retail frustration. The institutions are buying the 6-month losing streak. The retail holders are feeling it. Now, before you read all of this as a simple buy the dip signal, there's a specific development in Ripple's internal structure that most coverage has completely missed. Because it involves a conversation between Ripple executives that was discussed publicly but hasn't been connected to the IPO timeline. That's next. Let's talk about Ripple's IPO, because what David Schwartz said publicly is materially different from the no IPO plans framing. That most coverage has attached to it. Schwartz confirmed on the record that inside Ripple, there was a genuine, documented debate between two camps following Trump's election win. Camp 1, move immediately. IPO, customer acquisition, full-scale deployment, take every advantage of the favorable regulatory window now. Camp 2, proceed methodically, build infrastructure, strengthen the balance sheet. Let the regulatory clarity fully materialize before exposing the company to public market volatility. Schwartz described neither camp as dominant. He described it as a genuine executive-level discussion with reasonable arguments on both sides. Brad Garlinghouse has publicly said there are no near-term IPO plans. That is an accurate statement of the current decision. It is not a statement that the IPO question has been resolved permanently. And here is why the IPO conversation matters for XRP. SBI Holdings, one of Japan's largest financial conglomerates and a major Ripple shareholder, has documented expectations of significant gains for XRP following Ripple's IPO. That documentation is in SBI's public investor communications. An IPO does not directly create XRP token demand, but it does several things that are structurally relevant. 1. It gives Ripple a public market valuation that allows institutional analysts to compare Ripple's balance sheet to XRP's market cap, a comparison that currently makes XRP's price look compressed. 2. It creates liquidity for Ripple's institutional shareholders who currently hold private stock. And the institutional investors who benefit from that liquidity are the same investor class whose interest in XRP is most directly tied to Ripple's commercial success. 3. It signals regulatory and legal stability. No company with significant regulatory risk successfully completes a major equity offering. Ripple's IPO readiness is therefore a credibility signal that goes beyond any single partnership announcement. David Schwartz's disclosure that this debate happened and remains unresolved is the most honest signal about the IPO timeline available. Brad Garlinghouse's no near-term plans is the current decision, not the final answer. If this structural breakdown, connecting macro, technical, and corporate signals into one coherent picture is what you've been looking for, subscribe to XRP News Flow Signals right now. We build this framework every single week. Hit subscribe and you'll have the next breakdown before the headlines catch up. Join us. Let's address the "old season is dead" argument that has been circulating this week, because it deserves a precise, data-driven response. The specific claim, institutional adoption of Bitcoin through ETFs, has structurally changed the market, creating a permanent premium for Bitcoin and reducing the capital rotation into altcoins that historically defined alt seasons. The honest version of this claim, partially correct, but incomplete. What has structurally changed? Bitcoin ETFs have created a permanent institutional capital pool that buys Bitcoin on dips rather than rotating into altcoins. The rotation pattern from Bitcoin to altcoins that characterized 2017 and 2021 was driven by retail moving from Bitcoin to smaller assets. That retail-driven rotation mechanism is weaker in 2026. What has not structurally changed? The logic of regulatory clarity creating a category expansion. When Bitcoin ETFs were approved in January 2024, the institutional permission signal unlocked capital for the entire digital asset class, not just Bitcoin. XRP ETF inflows, Ethereum ETF flows, and broader crypto market appreciation all followed Bitcoin's ETF-driven re-rating. The Clarity Act creates a different but analogous permission signal. It re-rates XRP specifically as a statutory commodity, the same legal status Bitcoin has always had. The alt season question for XRP is not, will altcoin capital rotation happen the same way it did in 2021? It is, what happens when XRP gets the institutional permission signal that Bitcoin got in January 2024. The Bitcoin ETF precedent: $46,000 at approval, $100,000 within approximately 1 year. Mechanism: institutional capital that had been accumulating in the derivatives layer converting to direct spot allocation. XRP's version of that permission signal is the Clarity Act. The mechanism is the same. The supply dynamics are more compressed than Bitcoin's were. This is not alt season in the 2021 sense. It is a specific asset-level repricing event triggered by a statutory change, and it benefits the asset that achieves statutory clarity, not the entire altcoin market indiscriminately. Let's map the next 30 days precisely, because the specific combination of events that could materialize in the remainder of May has not been tighter at any point in 2026. Signal 1. Hormuz tanker traffic confirmation. Trump's war termination letter is dated today. The verification: ship insurance premiums for Strait of Hormuz transits. Current level: still elevated above 2%. Target: below 2% means commercial traffic is genuinely moving. Oil target: Brent below $90, sustained for 72 plus hours. That is the macro unlock. Signal 2. FOMC aftermath. The Fed held rates unchanged at this week's meeting, but for the first time in months, the forward guidance tone matters. With oil beginning to ease from its $113 peak, a single phrase about the Fed remaining data-dependent in an environment of falling energy prices is sufficient for markets to begin pricing in Q3 rate cut probability. That shift in rate expectations, even a small one, restarts institutional risk appetite. Signal 3. Senate Banking Committee markup. Senator Tim Scott: May markup confirmed. Senator Lummis: we are going to get it to the finish line. Senator Tillis: on record requesting markup scheduling. Brad Garlinghouse expects signing by end of May. If the markup happens in May and the floor vote follows in June, coinciding with a macro environment where oil is below $90, the double catalyst scenario produces the $5 to $8 price range that Goldman Sachs and multiple analysts have explicitly modeled. The three signals do not need to happen simultaneously. They need to happen in sequence within the same 4 to 6 week window. That window is now. Here is the complete picture as of today. Trump declared the Iran war over. Oil is still at $108. The market is correctly skeptical because every previous ceasefire produced the same pump-and-dump pattern. But something has genuinely changed this week. XRP posted its first green monthly close in 6 months. The RSI has hit the 30 level for the 4th time in XRP's history, a pattern that preceded 200% to 400% gains on every prior occurrence. XRP ETF flows are positive for the 4th consecutive week. Year-to-date, ETF inflows have turned net positive, $148 million. Ripple's internal IPO debate, disclosed by David Schwartz, signals that the question is unresolved, not closed. SBI Holdings has documented expectations of XRP gains following that event. The Clarity Act has its tightest Senate window in its entire history. May markup, June-July floor vote, senators on record, votes confirmed. Goldman Sachs explicitly modeled, oil below $90, Clarity Act in the same window equals $5 to $8 XRP. The war termination letter is not the signal. The Hormuz tanker traffic data is the signal. The ship insurance premium falling below 2% is the signal. The Senate Banking Committee publishing a markup date is the signal. Watch those 3 data points, not the presidential letter, not the oil headline, the actual mechanics. Because when those mechanics confirm, the 6 months of frustration, of sideways price, of retail capitulation will resolve in the way that macro-suppressed cycles always resolve. Faster than anyone expected, at prices that looked impossible the week before. This is XRP News Flow Signals. Data, not hope. Every time. Disclaimer: nothing in this video constitutes financial advice. All information is for educational purposes only. Always do your own research before making investment decisions.